Okay. Good evening, everyone. I'm Alan Solomon. I'm from the CPD committee of the ADAVB, and like most of you, I'm a dentist, but I'm also a practice owner. Now, I'd like to welcome everyone this evening for this special information session with one of the ADAVB's long-standing industry partners in BOQ Specialist. Just a bit of housekeeping before we start. All the microphones and videos we placed on mute for the duration of the presentation. If you have any questions during the presentation, please ask them via the Q&A panel. To view the presentation and the speaker at the same time, please select Fit to Window and Side-by-Side View. CPD certificates will be ready for you to download via the ADAVB website by the end of the week. Please click on the survey link and complete the survey at the end of this webinar. This webinar will be recorded and will be shared to all registrants. Please note that the information provided is as a guide and is only relevant to BOQ specialist clients. Now, I'd like to introduce our panel members for today presenting and answer any of your questions. Hugh Lander is CEO of BOQ Specialists. Krista Adams is representing residential banking, and Ursula Coetzee representing commercial banking. So over to you, Hugh.
Good evening, everyone, and sorry about that slight delay there. I was just working through the technology. And thank you, Alan, and thank you for everybody for coming into this webinar this evening. I'm delighted to be able to present with my colleagues Krista and Ursula over this ADAVB webinar this evening to discuss the BOQ specialist response to the COVID-19 crisis. I have a small slide deck which I'll run through, after which time we'll have a Q&A session which Krista and Ursula will assist. There we go, just sorry, moving the slides. Oops. Now, perhaps if I can just get some assistance from the administrator to move the slide deck forward, because I'm having a slight delay. There we go. Look, we've got some neat technology in this evening's presentation in the form of QR codes. So basically what that means is you can scan the QR code using any smartphone camera app to download the slide to your email. Of course, all the slides will be available and be able to be sent to your email at the conclusion of the webinar. If you do think of a question while I'm presenting, please click the Q&A icon in the bottom of your screen and a text box will pop up, which will enable you to submit your questions. And look, I'll endeavour to address as many of those questions as I can during the Q&A session at the end of the presentation. But if we run out of time, which we may do, given there are a number of participants on this call, please don't hesitate to reach out afterwards to your banking specialist who will be able to help you transition. So if we move on to the next slide, it's fair to say that in terms of my professional career, I haven't seen a crisis as disruptive as this. Perhaps the administrator, please move to the next slide. Yes, there was the Y2K and the GFC. We've had floods and even the most recent bushfires, but certainly COVID-19 has and will continue to have a lasting impact on both lives and livelihoods. A number of your operations have already been materially impacted. There's been reduced procedures brought about by government restrictions aimed at slowing the spread and retaining capacity within their health system. And the risk of the worsening crisis has been further exacerbated by patient and staff anxiety. This has had a material impact on the business and personal cash flows of the dental industry. We've seen this hardship right across our client base. It particularly peaked in the last couple of weeks of March, but thankfully it has moderated somewhat. But the dental industry has certainly been one of the most significant hit modalities, as has our general practice portfolio. But it's fair to say that across our 34,000 customers in the medical, dental and veterinary space, the broader healthcare ecosystem has been significantly impacted. Please, if we can just go back to the one slide back prior, please. Now, in terms of the broader economic situation, the GDP of Australia is expected to shrink by about 7% this year. This is the biggest economic downturn since the Great Depression and our first recession in nearly 30 years. The government, both federal and state, are doing their best to minimise the loss of life and livelihoods. And in terms of economic stimulus, they've thrown a combined $330 billion, or almost 17% of GDP at this problem. And this has been vital to allow workers and businesses to keep going, albeit in hibernation. Current expectations are that unemployment will grow from its 5.23% in March this year to 10 or 11% by Q3. And this, in fact, would have been closer to 15% had the government not thrown the kitchen sink, so to speak, at this crisis. Look, notwithstanding the position that we're in, I believe that we are in a better position today than we were a month ago. There has been relatively fewer community case transmissions. The quarantine measures that have been put in place by the government to close our borders back in early March has had a big impact, and the massive increase in testing has also helped slow the health crisis. This should also have a positive impact on the economies, and it means that hopefully the restrictions on movement can be progressively relaxed. My expectation is that, as it relates to the dental industry, that hopefully that we'll be back to level 1 restrictions in June. That interstate travel should be able to recommence in July. We should be able to enjoy a restaurant meal by September, and that overseas trip, unless it's to New Zealand, is probably unlikely to be happening until this time next year. So, I'm confident that there will be some slow and near-term relaxation of these measures. The residual concern is how long it will take for consumer confidence to return. And that will be, to my mind, a big determinant of the ongoing impact in the dental industry. If you look at China, for example, they're back working in their factories and mines, but consumer confidence has not yet recovered. People are still staying at home and they're reluctant to go out. Personally, I don't think that consumer confidence will completely return to the Australian economy and to the dental industry until there has been a vaccine found and rolled out. And the best estimate is that that's unlikely to be before April next year, in best case scenario. So in summary, I think we're a better place than we were a month ago, but there's still some material challenges ahead. Next slide, please. In this session, I wanted to outline some of the initiatives that BOQ Specialist has put in place to help you through this crisis so that you can withstand it and recover quickly. So what I'll be doing is I'll be recovering off how you can minimise your cash outgoings in the near to medium term through payment deferrals or restructuring on your loan, whether that's in the case of whether you have a residential mortgage over an owner-occupied residence or a commercial property. An investment property. Also, if you have commercial lending, whether it's for your practice premises, equipment or goodwill, or other specialist lending. I'll also cover what's known as the Government Guaranteed Loan Support Scheme, which enables eligible customers to access working capital support. And I'll briefly touch on a series of fee waivers and competitive deposit offerings that the bank is presently offering to support businesses through this time. And then lastly, I'll just talk about if you're considering additional financing facilities over this period, if you're intending to grow, expand or refresh your practice, what are the sort of things that you're likely needing to do to enable to get funding support. So let's start with residential lending. If we can move to the next slide, please. Thank you. So if you have a BOQ specialist home loan and you've been impacted by COVID-19 and you weren't in arrears before this crisis hit, you're able to apply for a deferral of the repayments on your home loans for 6 months with a 3-month check-in. This applies to owner-occupied residents as well as investment property. For example, where your tenant has requested a rent reduction, you may be having some hardship in terms of making the repayments on those loans. So you can apply for a deferral for up to 6 months. During this period, you won't be required to make any repayments. Please note, however, that interest continues to accrue on that loan during that deferral period. And after the 6 months payment moratorium, your payments will recommence. The payments will be recalculated to take into account the accrued interest for the term, and the term will be extended for the period of the deferral. Alternatively, if you're on a principal and interest variable rate loan, instead of asking for a deferral of repayments, you can convert by request from principal and interest repayments to interest only for a period of 12 months, if that makes more financial sense for you. An important thing to note for both the deferred payments for residential lending and what I'll talk about in a moment for commercial lending, if you do apply for these deferral options, it won't impact your credit rating or your ability to borrow funds in the future, as these are not considered normal arrears or hardship. Okay, let's move on to the next slide, please, which talks about cash flow support for commercial lending. So if you have a loan to BOQS, from BOQS, be that for your practice premises, for your equipment, for goodwill or the like, you can similarly apply for a deferral or a restructuring of your repayments if your business has been impacted by COVID-19. Next slide, please. So for clients with total commercial lending of less than $10 million, on the basis again that you weren't in arrears at the 1st of January 2020, you can request that any principal and interest repayments can be deferred for up to 6 months. Again, like the example of residential lending, which I just gave, interest will still accrue during this period and it'll be added to the outstanding balance of the loan. And so at the conclusion of the deferral period, as a default option, the term will be extended by the period of the deferral and your repayments will be recast. And basically the payments will increase slightly to take into account the accrued interest over that deferral period. Now, there are other types of arrangements that can be requested, including keeping the term the same or increasing the amount of any residual, but I encourage you to speak to your specialist banker if you want something other than the default option. Now, if your borrowing is greater than $3 million but it's less than $10 million, you will also be required to provide a declaration if you are a commercial property landlord that you will not evict your tenants or terminate the lease during the deferral period. So if you are in that position, i.e. with lending more than 3 million but less than 10 million, please speak to your accountant and banker because there are some additional requirements, as said, under government tenancy rules that you need to be cognizant of. Next slide, please. Now this slide, I won't spend too much time on it, and again I encourage you, if it's useful to you, to scan the QR code on the left-hand side of the slide. But it's a workflow that will help you navigate through the commercial facility repayment deferral process, or where you seek to switch from principal and interest to interest only. But again, in all these instances, your banker is there to help you navigate through these things. So please reach out. If we go to the next slide, please. Access to working capital. Now, you may have heard as part of the government stimulus package, the government has initiated what's called the Government SME Guarantee Loan Scheme. Now, under this scheme, the government is effectively guaranteeing 50% of any lending that is done under the scheme. and they're providing up to $40 billion worth of new lending under this scheme. So to be eligible for what is effectively unsecured facilities up to $250,000, you'll need to be a business, i.e. with an ABN. You'll need to have turnover last financial year of less than $50 million. The purpose of the borrowing needs to be for working capital purchases, e.g. paying overheads or salaries. It can't be for refinancing existing debt, and you can only apply and receive the loan once from one financier. I note too that the loans also must be drawn by 30th of September 2020. Now, it is an unsecured facility, and the way BOQS is structuring this is as an overdraft. There are no establishment fees or ongoing fees. Interest will be charged at a rate of 5.55%, but interest is only charged on the amounts that are drawn and outstanding under that facility. The minimum application value is $20,000 in terms of the facility size, and basically the term is structured as a 2-year term. So there'll be no repayments required for the first 6 months, and then after the 6 months, you'll just be required to meet any interest payments for that period of time. Now, at the end of the 2-year period, we'll work with you to ensure that that we put you on a repayment structure based on the cash flow capacity of your business at that time. Now, there are other lenders in the market that are providing this government guarantee loan. Everybody's got different structures. A number of them are providing effectively a 3-year term loan with no repayments for, say, 6 months. But they typically require you to convert to principal and interest repayments after that 6 months period. So again, in that instances, you need to be pretty confident with your cash flows that they'll be fully recovered after that 6 months period. Now, in terms of eligibility, and perhaps if we go to the next slide, please. You'll need to, if you're an existing customer, there's some detail on the left-hand side of that slide as to how you would apply through the various application forms. It is generally a pretty simple process. You will need to provide some information to assist us in approving that loan. Namely that your FY19 financial statements. You shouldn't have any ATO or statutory arrears within your business as at the 31st of December 2019, and you'll be required to show clear tax portals for that period. And you'll also be required to provide a basic cash flow projection for the next 12 months. Now, on the next slide, in fact, the next 2 slides, we have provided a basic cash flow template, which that you might find useful in your own practice financial projections. This is typically what we would require from you, as I said, to assess your eligibility for that SME government guarantee loan. It is quite straightforward. It's asking you to forecast your revenues and your expenses out for that period. On the next slide, it also covers what are your expected outgoings around insurance, other expenses, and other undrawn bank limits, and also takes into account the cash on hand that you have. Again, so if you find this useful, please download using a QR code noted on the top right-hand corner of that slide. But as always, talk to your banker. They're there to help you, and you know, it should be a pretty straightforward application process. Now, next slide, please. Look, in order to support our customers during this period, we are implementing a number of fee waivers to ensure that we minimise the financial impact on your business through this period of time. We're automatically waiving monthly account keeping fees on our one account for business for 6 months, and you can also request for us to waive your merchant terminal fees for a period of 3 months. In terms of the next slide, for those of you that have excess cash or extra cash, it's a good place to think about what you're doing with those, the cash on hand. We have a number of accounts which are there to support you with competitive interest rates, and also enabling you to get access to that cash when you need it. Our private access account, as I said, enables you to access the funds on demand. Interest is calculated daily and paid monthly. There's no monthly account keeping fees and no minimum balance requirements. And we've got a special on at the moment, offering a bonus interest of 1.25% on all arrangements for new money for the next 3 months. So the total interest rate on those deposits is 2%. Also, if you are thinking about putting some excess cash into a term deposit, we've got some great specials offering 1.8% interest on term deposit facilities for 6 and 12 months. Next slide, please. Sorry, before I do go on to Open for Business, I did want to just make a brief comment on deposits held with banks or authorised deposit-taking institutions. The government a number of years ago put in place a scheme known as the Government's Financial Claims Scheme, which effectively provides a government guarantee for deposit holders who have deposits up to $250,000 with authorised deposit-taking institutions such as BOQ. So in the very unlikely event that there was a failure of a bank, the government will effectively step in and guarantee your deposit holdings across your savings accounts, cheque accounts, term deposits, debit card accounts. Your offset, mortgage offset accounts are also included, as are other call accounts. Some accounts that aren't included, it's probably worthwhile noting if you're holding funds that aren't in Australian dollars, i.e. foreign currency accounts, and also credit balances on credit card facilities. So now back to Open for Business. Now, while it might be prudent to conserve your cash flow at this time, it's fair to say that this crisis will end, and I'm reasonably confident that it will end and there will be a so-called V-shaped recovery. As part of the government's stimulus package, they had put in place a number of attractive and generous tax concessions for this financial year and also next financial year. And there are two key measures here that are applicable to the dental industry. If you purchase a new piece of equipment by 30th of June this year, you will be entitled for an immediate tax deduction on eligible assets up to a value of $150,000 per asset. And that's an increase of $120,000 because the usual instant asset write-off is capped at $30,000. So the important thing is that it's this $150,000 threshold applies to on a per item basis, and there's no limit on the number of items that you can purchase, and it applies to new or second-hand assets. But the critical thing here is that they need to be first used or installed and ready for use by June 30 this year. I know there's not a lot of time, but again, if you are thinking about refreshing your practice assets and you are looking to mitigate some tax for FY20, this is a really good initiative that you should be thinking about and potentially talking to your accountant about. Now, if you're not in a position to move before and get your equipment installed before June 30, the government is also has some attractive accelerated depreciation initiatives for FY21. The main one is that it allows you to write off up to 50% of the value in next financial year. Now, if you are looking to expand your business and increase your level of borrowings at this time, our bankers are there to help you do this. We will, though, be asking you for some a few more questions than perhaps we ordinarily would. The basic type questions about how your business is currently trading, what your current cash flows look like, the available cash and commitments. Again, I refer you back to that cash flow statement we spoke about before. And if you're a landlord, what's happening with your tenancies, what sort of equity you've got to contribute to support the borrowing request, and information around what access you have sought to various government hardship assistance packages, including the JobKeeper allowance. So again, in this instance, you know, your bank is there to support you, and please reach out. So I might hand back to Alan now, who will moderate the Q&A. As I said, please, please take advantage of the opportunity to ask some questions through the Q&A button, and I'll endeavour to answer them, and with support from Krista and Ursula. Back to you, Alan.
Thank you for that, Hugh. Look, I've got a couple of questions that have been sent in earlier in the day. I'll just perhaps ask you one of these. If I have a home, this is from Joanne, if I have a home loan banker and a commercial banker, who do I contact?
It's a good question. Thank you for that. Look, you can contact either of them. We have residential lending and commercial specialists, but they work hand in hand. So contact whoever you feel most comfortable with, and the bank will be able to support you through whether it's a residential lending inquiry or a commercial lending inquiry.
Maybe I can ask a question and ask you to get your crystal ball out. If this viral epidemic or pandemic takes on a second wave, what are your predictions that are going to happen from, say, a banking point of view for us?
Again, that's another good question. He is hoping that we won't, that the virus will be contained, and that the projections that I put forward, albeit crystal ball gazing earlier in the presentation about trying to get back to normal towards the end of this year, come to fruition. If that's not the case, I think that both the industry and also government is prepared to continue to support the customers and business in general and industries in general, because you know, it's absolutely critical to ensure that that not only do we protect lives, but we're also protecting livelihoods. And it is not the government nor the banking industries benefit to see a prolonged and further damaging impact of this virus on the industry. So I don't have a crystal ball to say what would likely happen, but I'm sure that there would be further support packages and prospectively additional deferral or moratorium periods.
Okay, perhaps another question, which is possibly more likely, and that is that let's say this meanders on for another 6 months and JobKeeper has helped us all get through that period, but at the other side, there's a high chance, in fact, very likely, we'll be in a significant recession, and dentistry will be impacted in that as well. Do you see that there's still going to need to be some further financial assistance going forward?
Look, I think yes. I think that dentistry, while it's an essential service, is inextricably tied to consumer confidence and employment. And if there is a prolonged period beyond 6 months, there's no doubt that will put further pressure on the industry. So again, I think if that was the case, then the banks, including BOQ specialists, would be there to help work with customers. And the SME guarantee loan that I talked about, we have deliberately structured that as an overdraft, which only will require interest-only payments after that 6-month period, to contemplate the fact that this crisis could have longer-reaching effects, and the cash flows of dental practices won't necessarily return to normal until well into next year.
Okay, I have a question from John Boucher. Good evening, John. The question is, I suspended payment of a BOQ lease. How can I reinstate early repayments?
Great, thank you, John. That's a good question. I will, rather than dominating the whole webinar, I might hand over to Ursula to answer that, but it's a pretty simple process. Over to you, Ursula.
Hi, thanks, John, for that question. It's what we can do is you can alert us as soon as you want to reinstate those payments, and we will have to then adjust your facility as we have done before and just make those changes for you. So all you need to do is just reach out, and that's really basically it. Just let us know and we'll make those changes immediately for you. And that happens with anybody that's got any facility that they might have had put a moratorium on their repayments. You can just alert us at any stage if you wanted to recommence repayments. We can put that in place for you as well. So just let us know as soon as you feel that you're in a position where you want to, start your repayments again. We can assist you with that.
And John, we had, there's no doubt that, as I mentioned, in the last 2 weeks of March, there was a massive number of clients requesting a moratorium. And as I said, I think that we're in a better position today than we were a month ago. And we have seen a number of our clients who had initially requested the banking package relief phone in and say, look, I'm more comfortable now, and I'm no longer require it. And the process that we're typically going to be going through with our customers is before we finalise our system updates for the deferral period, the banker will be checking in with the customers just to reaffirm and to make sure that they're still comfortable with progressing with the original requested moratorium.
Thank you, Hugh. I have another question here from John Harrison. Is the asset write-off available if the asset is, for example, a motor vehicle is subject to finance?
Yep, good question, and I'll get Ursula to add to it, but it depends on the type of finance. So it will be important that it's done as a what's called an SSA, or a commercial hire purchase, where the ownership needs to be with the dentist. So if rather than as a rental, so in a rental the ownership stays with the bank, and same with the finance lease until the end of it. But if it's done as a chattel mortgage or commercial hire purchase, where the ownership transitions directly to the customer upon receipt of the vehicle, then you can, yes, claim the instant asset write-off.
All right, maybe I'll go to one of the questions that was asked earlier. I think we may have covered it, maybe just give a little bit more on this, and that is, if I take out an SEME scheme loan, what happens after the 2-year term? Do I have to repay the full balance?
So yes, it is a loan, not a gift, so the balance does need to be repaid at some point. But as I said, it's structured as an overdraft. At the end of the 2-year period, or at any time during the facility term, you can come and talk to one of our bankers, and we can restructure the facility so that you can repay that loan in a way that is manageable for your business, whether that's converting that into a longer term loan with structured principal and interest repayments. Again, we are very flexible on this. The most critical thing for us is to make sure that our customers actually have the capacity to trade through this difficult period.
Thank you. I'll ask another question from one of our earlier questions, and it's from Louise. If I take out a banking relief package, will it affect my credit rating?
Another good question. Absolutely not. So the government and the banking regulator has been very clear on this, in that these are extenuating circumstances. And again, so long as you weren't in arrears or in partial default of your facilities before the onset of this crisis, applying for the banking package relief requests, either on your residential lending or on your commercial lending, will not in any way affect your credit rating or your ability to borrow in the future. So that's, you know, you don't need to be concerned about that at all.
Thank you. And George asked a question which I think is probably relevant down the track. As a business owner, what could I do to allow me to have a fast start when conditions improve?
Well, that's a very good question, and a probably a very open question. I think the most important thing is from my perspective, and I'll get Ursula and Krista to think about what they'll add to it while I give my opening comments, is making sure that you're still remaining relevant to your customers, and that you're protecting and retaining your good staff during this time. You know, your business and dental practice is the key asset here, and it's important that customers know who you are and continue to receive communications from you, and know that the service that they're going to get when the restrictions ease is going to be as good as what they got prior to the onset of the crisis. I do think it will be important to ensure that you're promoting the hygiene and sterilisation aspects of your practice, because there will be some residual and some anxiety amongst consumers wanting to head back in to see their dentist. You know, obviously where they're required to go back in for work that needs to be done, I think that there'll be less anxiety there. But for people that just going in there for the clean and scale, they might think about deferring it. So focusing very heavily on the hygiene and sterilisation of your practice, I think will be very important. Secondly, and Ursula, you might want to comment on just making sure that your practice has all the right equipment, making sure that you can run effectively and efficiently on the other side of this crisis. Ursula, did you want to add any further comments?
Yes, I think that covers off on it quite well. And I suppose the thing is, in a situation like this, is to market your practice correctly. And that's also very important. People tend, that's one of the first things people stop doing when things like this happen. And I think when your practice is open, you know, they're open for business now, I mean, it's very important that your clients are aware of that and that you are accessible. And when it comes to the financing of any new equipment, obviously it's really important to speak to us and see how we can help you with that. There are lots of specials that are available by some of our suppliers too that can help you out if you are needing something now and you might want to defer the repayments of that. So there are some special offers. So you do need to chat to us about them, and we'll be able to assist you with that as well.
Thank you. A question from Mohammed. Can I get the 6-month relief on my non-business loans, including home loans and credit cards?
Great question, and I'll hand over to Krista to talk about that.
Good evening, everyone. I do have a voice. Yes, Mohammed, you can. We're providing moratorium up to 6 months on home loans, and also your credit card is part of that as well. So I think the key takeout of this is communication, and please reach out to your banker, whether it be residential or commercial, as Hugh mentioned, whoever's your most comfortable point of contact, and we'll get the right person involved for you.
Thank you. A question from Mark. What paperwork will I need to provide as part of the application for banking package relief?
Right, so basically the paperwork for banking package relief, i.e. the deferral of repayments on residential or commercial lending, is pretty straightforward. If your borrowing is less than $10 million, basically all you need to do is pick up the phone or type an email to your banker, and the payments will be deferred. As I said, if you are looking for deferrals when you for commercial lending facilities greater than 3 million, less than 10 million, you will be required to provide some additional paperwork pertaining to your commercial tenancies where you're the landlord. But it is a very, very straightforward process that's been put in place by the banks with the guidance of the Australian Banking Association. So the paperwork for deferrals is minimal. Now, typically what will happen is once you've put in that request, you'll receive an email from BOQ Specialist informing you of that your application has been approved. And subsequent to that, your banker will be back in contact with you just to confirm that the length of that moratorium or that payment deferral, and then we will, for facilities less than $3 million, we'll write to you in due course to tell you what when the payments will recommence and what the amount of those repayments will be. For facilities greater than $3 million, typically you'll be required to sign that paperwork and send it back to us. But for less than $3 million, it's a very straightforward process, and it's a one-way letter. Again, you know, if your circumstances change during that time, you can ring us up and we can recommence repayments.
Thank you. And I think a quick one from David asking, will I be charged interest during the 6-month period?
Yes, so it's a payment deferral, so you won't be required to make payments of principal and interest, but interest will still accrue at the contract rate during that deferral period. And in effect, that accrued interest gets added to the outstanding balance on the loan, and that's the balance upon which the payments will be recalculated on and the term extended. So again, it's I do think it's important that people think carefully about the application for deferrals. It's there to support businesses that need cash flow support where they're not fully trading. But it isn't a gift. It does need to be repaid.
Okay. Erica's got a question, which is again a crystal ball gazing one, and that is, do you expect a rise in unemployment and a reduction in GDP?
Yes, I think the unemployment rate at the end of February was 5.2, and it went up slightly in March, but really those statistics weren't telling the true story. My expectation is that unemployment rate will increase to 10 to 11% by the third quarter this year. We've already seen it in a number of industries, hospitality and tourism. The level of people who have been applying for job seeker and job keeper has been significant, with upwards of 30% of casual workforces in those industries being stood down or let go. So my expectation is, yes, that it will peak in Q3 at around 11%, and the expectation is that GDP will be negative by 6.77% this year, with again crystal ball gazing into next year. I think there'll be a partial recovery. There's a number of the things that have been delayed or deferred still need to go ahead. The recovery also will be very dependent, I think, on further stimulus that both the federal and state governments provide in terms of construction and infrastructure spending, which I think we will see more announcements from government once the sort of health crisis component of this the virus continues to moderate. The focus will go very much on ensuring that the livelihoods start to get rebuilt and getting confidence back in the economy.
Thank you, Hugh. One last one from me before we wrap up. Now, with the way things go in dentistry, with an expensive business to run, we all have fairly large loans to get started. Most of it's secured by bricks and mortar. With some of the doom and gloom regarding what might happen to the housing market, which a lot of our loans are secured by, are we going to be in a situation whereby, particularly if you'd only recently set this up, that your equity in your home is not going to be enough to cover the loan? And how are we going to deal with that?
Yeah, that's a good question for a final question too. Look, it's difficult to tell what the home lending market's going to do. I mean, I think I've read various reports about a 5, 10, or even higher reduction in house prices. For existing lending, which typically the lending that the BOQ specialist does, typically, while it might be secured by residential property or commercial property, that we don't retest the loan covenants and the loan to value ratios progressively. Now again, future lending, if the security support value is reduced, may be somewhat impacted, but existing lending should be fine. Ursula, did you have anything to add on that question? I think you need to come off mute, Ursula.
Sorry, I'm having a bit of technical issues there. Yes, I suppose, I mean, with an existing commercial mortgage, we wouldn't address the security when the loan is still running, but if a loan does expire, at that point in time, we may have to reassess it. Every 5 years or so, we do a reevaluation on a property, but it would also depend on what the LVR is at the time. Sometimes we do waive that requirement if it is pretty low. And if it has been used as a owner occ, so if the practice has been run out of that property, so we know that you're running a practice so that's part of your business, so it's pretty secure. If it is an investment property, that's slightly different and obviously would be more risky depending on where your tenant is. But generally speaking, there wouldn't be an issue if you've got an existing loan with us. The only time it would come up would be if we have to reassess the loan and the value of the property.
Further to that as well, I just thought I'd just chime in with a comment there. We also, obviously, you mentioned residential property prices as well, and if you've got commercial lending secured against your home loan, or sorry, your homes, is a good opportunity to review the commercial product suite and find probably a more suitable spot to finance, the equipment or purchase or practice goodwill purchase through other means other than using your own home as security for that as well.
All right, well, I think there's some good commentary there. I'll have to take that on board and consider my options going forward. Now, next one. So look, if you want to contact BOQ, there are some people you can contact. Obviously, Krista and Ursula, who've spoken to us tonight, and so that's been fantastic. I'd like to thank all three of our presenters tonight in what you've provided for us. So normally we'd like to have a show of support with some clapping, but we can't do that. So, but I will take it as read that everyone has enjoyed the presentation tonight, and I hope everyone's got a lot out of it. Now, please, for ADA members who have been watching this, your feedback is very important to us. So please complete the survey, which will be available once we end this webinar. So thank you everyone for your tonight, and good evening.
Thank you.
Thank you. Thanks everyone.
Yeah.